Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 11th of October. All right, now the key theme of what's going on, the dollar slips on dovish Fed remarks. China hopes help euro, right? So we're coming back to the fundamentals, the conflict in the Middle East. You know what? It's sort of like old news, and I hate to say that, but because there's a lot of people impacted. But you know, I've been trading for 35 years. I must have seen 100 of these incidents at least. And 1 or 2 days afterwards, if it's regional and it's like it impacts oil for sure, outside of that, the rest of the market gets on with what's happening. So, and understanding the cycle of what's going on with the economic numbers and how the central banks managing everything, right? So if you look at the calendar here, right, there's a whole bunch of Fed speakers, and there's a few more coming out here as well. Then we have the FOMC minutes. Now, the people underneath the chairman, right, they have jobs to do. And one of them is to go out and tell the market exactly what's going on. And it's sort of like doing the dirty work for the big guys. And what I'm talking about is you get these Fed officials coming out and looking at Atlanta Fed President Raphael Bostic coming out and saying that does not need to increase interest rates, right, the Fed. So he would be, as much as they want to say they're sort of opinion-based, they would be under instructions to get out there and tell them, you know what, we're changing the plan. So what it does is it slowly gets into the market that the Fed are changing their stance. The guys in all the banks and the fund managers, they know that the central banks do this, right? This is how they slightly adjust strategy from one meeting to the next so the market can anticipate and almost factor in a shift of that strong hawkish tone, right? And this is a real thing that you have to be very aware of, because when you look at the calendars and you see things coming up and you're like, oh yeah, what's happening here? You got all these Fed officials speaking. Well, they're out there to tell you, hey guys, we're here to sort of tell you that things are slightly changed, you know? And so what it does is it slowly factors in a less hawkish tone from the Fed. Now, we have the FOMC minutes coming up. That's obviously key to what's going on. But outside of that, if I just clear the screen, the key sort of event for today, and I say today as in Australasia, Europe, and North America, is the US PPI numbers, right? That is the key thing. FOMC minutes, we might see some more detail here about the FOMC. Like what we get is, we get the headlines, right, after the meetings and things like that. But now we want to see the itty-gritty bits. Was there really a very close discussion about their hawkish tone or not? Because that could unravel a bit more information around what the Fed are supposed to be doing, which is higher interest rates, right? So anyway, this is going to be interesting to see how it plays out. Now, when I look at that's good to understand that, okay? But if I want to sort of come over here and piece this together. And what I'm really looking for is, I'm looking for a situation where I've got, you know, I'm looking for a weaker dollar. And I was saying this in yesterday's Daily Market Insight, that we were starting to look for the dollar index to go down. And that would push the euro up, okay? Sterling up also, Aussie and Kiwi. Now, and then, you know, dollar Swiss down, dollar yen down, and you'd think, dollar CAD down. Dollar CAD, if anything, is sort of staying pretty stagnant. Now, out of these, what did we experience? Well, I can tell you what, there's been a bit of a change, right? So, the dollar index went down, euro went up, sterling was already above the level, and the price action was not really conducive to an easy trade. Kiwi's already gone. So, to me, when I look at the setups here, what can I trade, right? Well, once again, let me just clear the screen. I'm looking for opportunities that are coming up. I've got a great level here on euro, right? If this story starts to build more weight, and what we need for that, weaker US PPI numbers, right? It's not rocket science. You just line up the move with the data. So if we get weaker US PPI, euro's more than likely going to go for a run. So will sterling, but we don't have an entry level here, a technical entry level. Aussie, we do. Kiwi, we don't, right? So, and then dollar Swiss is already lower, but we do have a level below that. And the dollar index is already down. No one really wants to dance with dollar yen, right? It's still going up. That interest rate differential is still in play. No one, I mean, the market's sort of aware that the BOJ could come in, but No one's willing to jump in because it's a little bit too out there. Dollar CAD, well, you know what? It's almost too connected to oil. We've got the situation with, you know, in the Middle East where we saw oil jump up $3.50. It's like dollar CAD wants to go down, but they're sort of conscious of the fact that oil might drop quickly if things settle down a bit, right? If that's even a possibility. Now, so that's where we are with the major currencies, right? So when we are looking for a trading opportunity, I look at the fundamentals and the technical setup. When we are looking at things like the equity markets, like, is this a real move? Okay, I would be saying to you, yeah, like check out the move here on the equities, right? They are correcting a lot of that downside carnage from what the Fed said a while back about, you know what, we're going to have to raise rates, we're going to be hawkish, blah, blah, blah. That is being rolled back out. That's why these things are going up. Or like gold back at 1860, right? Bounced after with this Middle Eastern conflict. It's now sort of found a base there. That's its new home. No easy sort of trade, to be honest. And check out oil. It had gapped, but it's not really going anywhere, right? So that's a little bit of a tricky one there as well. Obviously, dollar index lower. You'd expect euro to be higher. Euro is 58% of the basket of the dollar index, right? So what I'm trying to look for when I look at the equity markets and I look across the various instruments, okay, I am trying to work out, is this a real tangible move? So when I see a situation like we had yesterday, let me just find where my annotation thing is. You know, the yields were falling, right? The price of the US treasuries was going up, means the yields are falling, means the dollar's falling. At the moment, US equity futures, well, a little bit up, nothing dramatic. If anything, it's pretty flat, and that's giving us a sort of a flat signal here for, you know, the risk on, risk off environment. Risk on, euro, sterling, Aussie, Kiwi going up. Risk off, the US dollar rallying. So there's a bit of a pause, if you like, in the market based off that. So that's where we are as far as the major instruments. You've got the trading opportunities in front of you, right? And what I'm saying with that is just keep an eye on the US PPI numbers. Of course, you're always expecting something out of the next couple of Fed officials, but the PPI will be the key to it. Weaker numbers, it's an easier trade. It goes with the current short-term direction. That's something to keep a very close eye on, right? And actually, one thing that you can do, right, is, if I just get rid of this calendar for a second, after the US PPI numbers come out, right, you got to sort of connect the dots. And if you're looking for verification that the dollar is moving on this, once again, if we get weaker US numbers, right, keep an eye on the yields, treasury yields, right? If they start to move lower, the dollar will be falling, right? Equities will be going up, euro, sterling, Aussie will be going up, and the dollar will be falling against everything else, right? So you can connect the dots after the release. What that does is it takes a lot of the risk out of the trade. At the same time, of course, it takes out a portion of the move, right? You're not getting in at the instant, but you know what? You are getting confirmation, then you get in, right? This is about being smart, not trying to make every cent out of every move. That's the key to that. So outside of that, you know what? Just keep an eye on the global markets. Once again, if I just change the screens here, right? You got obviously the hourly charts looking technically, what is the easiest trade, right? That's what we're always looking for. If we've got dollar weakness, what is the easiest trade here? So, you know, as I was saying, like with a technical backdrop, that's an easier trade than sort of trading at mid-range. Doesn't mean sterling doesn't keep going up, but we just haven't a level that we know the majority of market participants are getting into. Aussie's been suppressed for some time, so I wouldn't be surprised to see a solid move on that. We need some significant weakness in the US numbers. It may actually wait till Thursday's US CPI numbers to really get that kicker through the market, right? So, and that's what your job is to follow the trail of the markets, all right? So looking once again, and the best way for me is I've got a couple of different templates here now. One in particular is the FX template, where I like to see what the dollar's doing across the board. Okay. And at the moment, it's a bit mixed. Okay. You've got some flat, some up, some down. Not like yesterday where the US Treasury yields were falling and the dollar was falling across the board, right? Things that stand out to me is the Kiwi, right? Falling against everything, right? So that's something that worth going to have a look at. You look at dollar Swiss and dollar yen. Well, the safe haven trade is in play here. That's why dollar yen isn't coming back. People are still happy to buy yen based off the conflict. Dollar Swiss, not so much, right? So there could be a bit of rolling out of that. And then that's it, right? The whole aim of our training program is to get you, to enable you to read the market the same way I am, right? Looking at the market, connecting the equities with the majors, commodities, and looking for the fundamental numbers to line up and give us a nice, easy trade. Anyway, US Treasury yields the key. Just keep an eye on those Fed officials, right? There's a couple of goons in there that, you know, there's always one or two that will come out and just be completely disruptive. Usually, they are the ones who are not on the board, right? And they like to be disruptive, but they don't really have much to say. The ones who are part of the inner circle, they'll be doing the heavy lifting for Powell, right? Get the message out there that we are sort of turning the tide. What'll be a key indicator? Well, all the economic numbers are indicators, and it's the PPI, right? The consensus 0.3. Keep an eye on this because it's the first inflation number for the month, really, or definitely this week. And then you can be in a good position. You may take some cash out of the market on that. Outside of that, we are looking very closely at the next day where we do have some key numbers, and that's the CPI numbers, right? Huge, right? So sit tight. The market is coming together sort of nicely. There is still that geopolitical situation which could escalate. If it doesn't, there's nothing to worry about, is what I'm telling you. All right. Just focus on what is in front of you. Don't get overexcited and start putting the house on the next trade. Build capital. Good luck, guys. All the best. Cheerio.